What's up, everybody? Welcome to Trader's Choice Crypto. My name is Keon. Let us just take a moment. I'm here, you're here. It's all good. It's a crazy week, both in cryptos and in the stock market. And we're going to talk about why that was. We're also going to get into the educational piece of how to play your trades. We're going to talk about the XRP Ripple case and the advancement in that case, why Wall Street and I am still very bullish on cryptocurrencies, and the gem of the week. So I'm going to have my man Greg post some of my social media links down below, my Twitter and my Instagram, so you guys can follow me for more real-time news. I think there's a lot of news that I see that I want to share with people throughout the week, and I think Twitter would be good for that. With Instagram, you'll get a mixture of crypto and some more Zen kind of content. So let's get into it. And again, before we begin, I would like to say I'm not a financial advisor. Please invest at your own risk. Don't take out that second mortgage. Don't do it. Anyways, let's go to the beginning of the week. I think around Monday, where we started seeing the pullbacks in the crypto markets. And that was from some rumors that were spread out about the US Treasury charging financial institutions for using cryptos for money laundering. This created some FUD, which stands for fear, uncertainty, and doubt. I'll be using that word a lot in the market, and there was a sell-off. We also had in the middle of the week, middle-ish, President Biden coming out and saying that he wants to raise the capital gains tax almost twice as much, which not only affected the stock market, but definitely affected the crypto markets as well, with the Biden administration having more and more talks of crypto regulations. So in general, those were the big FUD moments. Of course, JP Morgan had a news article that came out betting that Bitcoin is going to crash. More FUD, which is funny because in the same week, I see a news article, let me pull it up, which is from this company called Consensus, a crypto technology company focused on Ethereum, raised $65 million from firms including JP Morgan Chase, MasterCard, and UBS. So, but you guys already know, you guys are smart, you guys are Greg's Lions, and I'm sure you guys know what's up. So those were things that caused some sell-offs, some corrections within the market. I am not fazed whatsoever. I still think we are in a bull market. Corrections are normal. We just got to know how to play our trades, buying those dips, taking opportunity of these flash sales that occur from these new pieces of news, these fuddy news articles. So with that said, interestingly enough, even though we had a pullback on major cryptocurrencies, including Doge, I think dropping like 20 to 30%, Ethereum hit a new all-time high. And this was attributed to a news article that was floated out in the middle of the week with Uniswap announcing, which Uniswap, if you don't know, it's the premier DeFi exchange platform that runs on the Ethereum blockchain. They came out with a news article that said they're doing $10 billion worth of transactions per week. That is a lot of money being transacted on the Ethereum blockchain, henceforth why it hit an all-time high before it pulled back. So next up, I would like to talk about the Ripple case against the SEC. In the comments, I see a lot of you guys posting about Ripple and XRP, and I wanted to cover that for you guys this week. So XRP is doing incredibly well against their case with the SEC. They have been able to pull off a couple of major wins within the case, which is strengthening their arguments. And they've also threw in a separate argument at the SEC, claiming that they did not take into account XRP holders, and that by bringing this lawsuit, they've harmed the investors, which goes against their purpose, which is to protect investors. And so with them doing exceptionally well, I think there is going to be a settlement. And most importantly, when that settlement does happen, XRP is going to get relisted on all major exchanges, which is going to be extremely bullish for XRP. And to add to that, the SEC's new chief, Gary Gensler, this guy just got appointed, and what I appreciate about him is the fact that he's an MIT professor, first and foremost, who specializes in blockchain and digital currencies. So it's not just some random guy who, is stuck in the old system, but somebody who is familiar with what is happening with the new system. And I think that will, in the long term, be very good for cryptocurrencies. So, a couple more bullish pieces of news. Venmo, which is a money sending and receiving app with over 70 million users, just put crypto access in the palm of everybody's hand. It's not all cryptos, just a couple of cryptos. So people are going to be able to send crypto back and forth to each other through this platform, which again, greater accessibility, more mass adoption, extremely bullish for cryptocurrencies. And also Robinhood is trying to integrate cryptos into their platform. So with weeks like this, where we have corrections and pullbacks, I think it's very important to know how to play your trades. And with every trade that you go into, which in the future I do want to cover how to pick good projects, but for today, we're going to talk about how to play your crypto trades. With every trade, you need two strategies with something sandwiched in the middle, which I will talk about. You need an entry strategy and you need an exit strategy. These are incredibly important if you want to capitalize on your crypto investments. When it comes to entry strategy, your best friend, absolute best friend, is dollar cost averaging. You don't just ape into a trade and put all your bag into a specific coin because you're FOMOing hard that it's going up and you want to take advantage of it. With dollar cost averaging, you average into the trade, into the cryptocurrency. You might do it one of two ways. You might do it each week at a specific time. You might have a reoccurring payment, which on platforms like Coinbase, you can do this, where you can set up a schedule where you purchase X amount of whatever cryptocurrency each week, or you can start an initial position, watch the trends, and invest accordingly. When there is a dip, the greatest time to dollar cost average into the trades. If you see that the underlying asset is going up, start with a small initial position. You don't have to buy a whole Bitcoin or a whole Ethereum. You can buy fractions of it. And if it continues to go up, add little bits at a time. During the dips, buy the dips using dollar cost averaging. And that is the best entry strategy that you can do. I shouldn't say the best. the safest because we want to minimize risk as much as possible, especially with cryptocurrencies and these altcoins. There is so much volatility within the markets that it will never hurt to play it as safely as possible. So you got your entry strategy, which is dollar cost averaging, aka your best friend. Let's move forward to the next part, which is what I like to call what is in between, and that is diamond hands. If we see what we see similar to this week in the crypto markets, the definition of diamond hands means holding the cryptos no matter what kind of dips are occurring. When there is profit, then we can start thinking about our exit strategy. But since cryptocurrencies do not expire, it is very important to have those diamond hands. So let's say the trade worked excellently in your favor, which we're all wealthy, and I wish you abundance, and I know it's going to happen for you. Then we move on to the next section, which is the exit strategy. Now with the exit strategy, there are a couple ways that you can go about this as well. The way that I believe is beneficial, if you see that you have a good amount of profit, one thing to consider is pulling your principal investment, which is whatever you started with in that trade. And so the rest of the money is house money and is profits, especially if you think the underlying asset is going to continue upwards and you can average out your profits slowly. You can start pulling profits slowly if you think there is an upside, or you can pull profits all at once. The term diamond hands, to be really honest, it's only when things aren't looking so well. I wouldn't really say have diamond hands when you see profits, because personally I've gone through 10x of an underlying asset. I'm like, oh, diamond hands is gonna keep going up. But next day, came down and I was like, damn, the regret is so much worse when you do not pull profits off of a major win than if you are losing. In my opinion, of course, humbly, my opinion. So anyways, those are the 3 ways to recap of how to play the best way to play crypto trades. 1, dollar cost averaging as an entry strategy, diamond hands, and then exit strategy when you start seeing profits, either all at once or slowly but surely start taking out profits. And that is how you become a crypto wizard, which I know all you guys are crypto wizards, and you guys shall become crypto wizards because there's just so much abundance within cryptos, whether it's just investing in coins or staking or yield farming to earn that sweet passive income. All right, guys, last but not least, let's talk about the gem of the week, Harmony, which goes under the symbol ONE1. I'm going to read a couple of very notable things that I enjoy about this project, and then I'll tell you guys where to buy it, which is basically Binance.us or Binance.com under the ticker ONE. So Harmony One is a blockchain-based platform built to solve the riddle of delivering both scalability and decentralization at no expense of one another. Right now it has 2-second finality. That's right, 2 seconds, which basically means transactions on this DeFi platform are done in 2 seconds compared to the Ethereum blockchain, which is anywhere from a minute to 7 minutes. It's a long time to be waiting for your money to be floating in the ethers. The team behind it is amazing. They have a market cap of 1.1 billion, which means they have tons of room to grow. Last time I checked, I think it was about 11 cents a coin. And these guys are partnering up with big names and announcing new partnerships every week. They just came out with a governance coin, HRC20. And when you stake the one coin, it is 12% APY, which is incredible. And we'll talk about yield farming and staking in other videos because I think it's an excellent way to make passive income. So in short, again, Harmony One is an effective proof of stake with sharding, 2-second block time, and gas fees that make it one of the cheapest and most efficient networks for both developers and end users. And you can buy it on Binance.us and Binance.com. I'll post the link of their website also in the description. Do your guys' own research and give the project your due diligence. And that's it for this week, my friends. Like I said before, if you want to follow me on my social medias, I will have those links below as well, Twitter or Instagram. And thank you guys. Again, I love reading you guys' comments, projects that I know about, projects that I don't know about. I think it's fascinating. The world of cryptocurrencies is enormous. There's just so much to it, and it's expanding by the day, whether it's meme coins or projects that have incredible utility in real world use. I think we're moving more and more towards this incredible landscape, this infinite landscape of freedom, of abundance, not just for the select few, but for everybody. All right, y'all, that's it for this week. Thank you guys for sticking along this video. I know it was a long one. And if you guys found this video useful, please hit that thumbs up button, subscribe to this channel, and hit that bell notification all somewhere down there that you guys stay up to date with the latest news and trends of both the stock market and cryptocurrencies. And I will see you guys next week, and I'll be sure to leave the links that I told you about in the description below. Take care.